Namaskar traders and a very good evening. 26th of December, Monday evening. It's 8 p.m. and let's try and evaluate what happened with the market and what can we expect tomorrow. As always, the weekly, daily and the 75-minute time frame combinations in front of us. This is the Nifty near-month futures, and we can say that we had a bounce back of a day. It happens to be an inside bar because it's a lower high and higher low. However, on an average basis, the range is fairly expanded. My range indicators are suggesting that a lot of price movement is happening within a very small span of time. So the intraday volatility or choppiness is there. I think it will stay. The sharp sell-off is trying to kind of get a hold to itself, kind of a halt and maybe a bounce back. So we've got a bounce back, and the bounce back could have been much better end of the day. However, it slipped from the 18,100 level and closed a tad above 18,000. So the fort 18,000 has been recovered. Whether it's going to be on a momentary basis or this is for good, that I think we need to give the market a little bit of more time. It is too early, just on the basis of today's bounce back, to call that we have a bottom in place. At least if we use the rule of fractals, we should let the market play out another day, one more day at least, and then we can say that okay, we have a short-term low in place. Right? So too early to call it a bottom. Yes, most of the sectors and stocks would have given you a bounce back, and so pullback shots, that is selling on a rise, can be an opportunity for tomorrow or day after. We will talk about that. But first, let's talk about some levels for the Nifty. We are looking at the Nifty near-month futures, and if you recall, I had dropped some targets, 18,100, 130, tad below that 18k mark, etc., etc. And we had some combination or confluences with the Fibonacci projections and retracements, and these levels are met. So I'm going to let go of this particular level. This is gone. This particular projection of 161.8 is also being taken care of. I'm going to keep this for some time because the market is more or less in this zone, 100 points above and below. So we'll keep this level. This is a good level because if you take a look at the weekly charts, and I think I've discussed this, that structurally it's a good support just below that 18k mark for the Nifty, because earlier there were some decent highs which should act as the current lows. Again, I'll reiterate, too early to call it a low, but at least the markets have bounced back. The levels beyond this are a little scattered. There, I don't have any strong confluence. Just hold on a minute. Let me check what I have on my retracements. Yes. So as I check, there's not much of a strong confluence, but this is not a bad level because it confluences more or less with a pretty decent zone here, which acted as an important level from where the bounce back did come in the past. And of course, then there's the 17,400. Now, it's not fair to talk about 17,400 or 600 right now. We just had a bounce back, so let's not talk so bearish. And we've got the levels in place on the downside. What about the upside? What if the market bounces back, and where can we expect some resistances? Now, we should not forget the fact that we are still in a structural uptrend when it comes to the long-term time frame, which means that overall tendency should be on the upside. Now, in this particular fall, from this point to this, and what I'm going to do is first I'm going to drop an info line from this high to today's low, and it's a 6% correction, and this 6% correction has come in 17 bars, 17 daily bars. This is important, number 17. I will show you why I'm saying so. So let's refresh this. In these last 17 trading days, if I figure out, I have two fractal highs, this one and this one. This is not a good fractal high. It's not even a fractal high. So I've got two fractal highs, of which I've generally noticed out of my experience that the second one, either high or a low, whenever you're drawing a retracement, this plays an important role. rather than this one. However, I'll drop a retracement in both the cases. So from this high down to this low, and we are going to drop some retracements, so which is 38.2, half 61.8. I use both 76.4 and 78.6, and there we have around 18,200, 300, 430, and then close to 18,600. I'll do the same with this high and this low, and they'll more or less be in very, very similar lines, and I'm not going to plot it now. Let's keep this. Okay, so I'm keeping this as my retracements because this is from where the serious selling came after this top. This was more like, okay, market is cooling off, but this is more of a corrective move. So I've purposely drawn the retracement from this high to this low. And what do I have? Just give me a moment. Let me check if I can just right click on it and sink in a layout. I'm sinking in the layout, and it comes on the daily. It did not. It came in the weekly. It did not come on the intraday time frame. Nevertheless, what I was trying to do with TradingView is essentially sync my retracement like this, so that I can evaluate the 75-minute time frame better. The reason I'm looking more at the 75-minute time frame because that's where I'll have structural highs and lows. So the first one is 18,200. Okay, because very clearly a little above 18,200, close to 18,250 is where I have the highs and the lows. 18,200, however, is a pretty nice erstwhile low. So we can say 200 to 250. Okay, more of 250. Then next I have 18,300. Now, not bad, these lows and close to these highs. Again, a little tad higher, 350 is where these highs were, 50%, close to 50% of this candle. So again, 250, 350, I'm sorry, I just removed it. So 250, 350, 300, 350 kind of level. Then 450, I'm not too sure because very, very clear it is. It's got an 18,500 kind of a level, which coincides with this high. So I would say this move that we have had today, the slip, essentially faces resistance from this low, which is a little above 18,100. That's from a short-term point of view. And for the rest of the week, if we continue to see bullishness, then you can eye these kind of levels. Now, which one will act as a resistance? Whether these levels will at all act as a resistance or not, this we have to leave it to the price. All we can do is do our homework and calculations and then expect that the market will play out accordingly. Right? So strategically, you should be a little careful. Intraday volatility is very likely to continue. Structurally, in terms of the trend, it is still in a downtrend. It's giving us a downtrend bounce back. Long-term trends are really good, so long-term investors should not be worried so far. The short-term traders will find it a little difficult for the rest of the week. I sense so, I feel so. We just have to go through this. Now, the amazing move came from Bank Nifty. The Bank Nifty bounced back huge in comparison to the rest of the sectors. It's 2.2% bounce back coming in primarily from the PSU banks. Big move. The 75-minute time frame also has moved phenomenally well. If I expand the 75-minute time frame, then I can clearly see, without even drawing any kind of retracements per se, I can see that this level is important, close to that 43,000 level, and over here we have a range bound movement. So this exceptional bounce back that we have seen today, that also had given us a short-term dip. If it extends further up, I think 43,000 is the level of short-term resistance that one can look at very clearly. So the overall markets are still in a downtrend. 1. We're going through a short-term bounce back. 2. Is this a short-term bounce back or is it going to be a bottom? We do not have clarity. At least another 1 day of trade needs to be seen, that is tomorrow. If the market is in a hurry to fall, it will dip down itself tomorrow, by tomorrow, Wednesday. But if it sustains, let's say 50% of today's candle, the gains, if it sustains by the end of the week, then that's not a bad move. That means that the market is not in a hurry to fall, which means that there can be some bullishness. So with this strategy, with this approach, please trade accordingly. Now, what has been happening over the last few days? Now, today's reading is also a mild sell number for the FIIs. I'm looking at the cash market provisional. And if I take a look at the monthly, the month is almost about to come to a close. We have a very relatively smaller sell number from the FIIs. The DIIs, on the other hand, I think are relatively much larger by numbers. Now, this does not give you much clear-cut clarity, but the fact that from August itself, FIIs have been predominantly buying if you add up the last 5 months. So got some improvement over there. 17 days, if you remember, we just did an info line check of 6% correction from high to low, or 17 bars. So with that logic, what I'm going to do is I'm going to come to stock charts and take a look at the sectors. And what I'm going to do is, rather than the weekly, we'll go to days. Okay, update. The benchmark I'm using over here is CNX 500. And over here, I'm going to kind of drag it and make it 17 days. What I want to say is, in this particular high to low sell-off, what happened to the sectors? How did the sectors play out? PSU Bank is the only gainer in this entire pack, followed by FMCG, Bank Nifty, private banks is also there, financial names are also there. That is still like plus 2% to minus 2%. Rest of them, of course, more than 3.5% fall, as big as almost 10% from media. IT was the one that dragged first with a huge fall in TCS and Infosys, and then real estate. So not too surprising, you can see all of them, all these sectors have now, on a 17-day basis, have now moved into a lagging quadrant. Now let me sort this in terms of tail, in terms of the positioning of the tail. And I will fit these graphs, and let's take a look at FMCG in the leading quadrant. Private banks is also in the leading quadrant. Financial services is bouncing back and picking up relative strength momentum. So you can keep an eye on stocks like Bajaj Finance, Bajaj Finserv, how they play out. Then we have pharma. Now, not bad, but the charts are not that great. It has recently given a sharp bounce back on the resurfacing of COVID, but then we have seen a bit of correction. So I'm not too sure what pharma is trying to do, and healthcare is there. Auto, an important number. It's in the improving quadrant. You have to check with the auto chart how it is playing out. As you can see, as I've kept my cursor, it's in a pretty strong downtrend, short-term downtrend. Energy is more about oil and gas, names like Reliance and ONGC. So, and there you have consumer durables. So these are the improving quadrant. And if you ask me, within this improving quadrant, you can focus on energy and auto. Pharma, healthcare, I'm not too sure, because it's quite reactive in nature. It's fairly reactive. Now, what you'll find surprising is the CNX PSU Bank is actually, based on the RRG on the last 17 days, is actually in a weakening quadrant because of the kind of movement. This is a lot to do with SBI, because SBI had fallen sharp and it's given you a bounce back. Stocks like PNB and Bank of Baroda are zooming, but that's the reason why it's in a weakening quadrant. Does this mean that this is the time that you should book out of your PSU banking stocks? Or I'm not too sure about book out, but I would definitely say to release a bit of weightage from it. You can go a little, what we call underweight, sell few, a certain percentage, so that you enjoy the profits, the cream on top, and then look to add better lower levels. IT still in the weakening quadrant, in the lagging quadrant, but it's gaining some vertical length. This is essentially gain of momentum, which means that sooner or later it should go to improving. And if it starts to move horizontally, like left to right, then it's gaining relative strength ratio. IT is particularly of some interest for me amongst all the sectoral indices. If I open the CNXIT index, what you will see on the Japanese candlestick charts is a pattern which is called as the bullish Harami pattern. Not a bad bullish Harami pattern. The smaller the greener body, it would have been better, but okay, we can deal with it. I have a nice divergence playing out here, which is suggesting that the rate of fall is likely to slow down. No such signs coming in from the modified Heiken-Ashi candles. So I would term this situation of CNXIT as make or break. It has signs on the charts which suggest that if it takes out today's high and Friday's high, it has a potential to give a short-term bounce back. It's there on the charts, patterns and positioning of the indicators, number one. However, number two, it has moved into a strong downtrend. Weekly charts are still on the downside with momentum dropping. So any kind of a breakdown from this means that this bullish Harami pattern gets negated, and so it can open up further gates towards the downside. So IT will be, I think, an interesting sector tomorrow as well as day after tomorrow. Very likely to get a move. Keep an eye on stocks like Infosys, keep an eye on Tech Mahindra, TCS. Of course, you are going to get a move in either direction from this pack very soon. Also, not to forget the fact that IT did not participate so much. If I sort the sectoral indices, then you will see that IT comes right above Pharma. Pharma was the only sector down today, and IT was the least gainer. So why didn't you perform in the bounce back? So that's a big question, which brings in the fact that does this mean that you're going to break the lows and fall? So there are, I would say, equal weightages of, or equal evidences of a prospective fall and equal evidences of technical evidences of a bounce back. Nevertheless, you should keep an eye on IT stocks. Let me finish quickly by taking a look at the global markets. SGX is down 20 points as we discussed, right close to that 18K mark, which is okay. We had a high momentum bounce back. S&P 500 is 22 points up, just 0.5%, nothing much, just trying to stabilize. FIIs will not be very active this week, as you can understand. So let's see. We hope that markets manage to sustain today's gain and stay above that 18K mark. All eyes on the IT, and based on tomorrow, and we can say based on Wednesday's close, we will get some clarity whether we have a short-term bottom in place or not. Right? Till then, take care of yourselves, trade well and trade wise.